Hello, everybody, and welcome to today's Monday morning mortgage update. My name is Sean Wohland with the Wohland Mortgage Team here at Waterstone Mortgage, and we've got some exciting news today. A lot is happening. A lot has happened last week. Some big changes with the BLS, which is the Bureau of Labor and Statistics. So I am going to jump right in now, and we are going to show you what is happening and what we can do to communicate this to our buyers. And here we go. So first off, big news to cover today. We saw some major things, and moving on, nice rate drop. We saw rates get a lot better. Well, not a lot better, but in moves per day, it was a very significant move on Friday. So we'll go over that in a little bit as to why that happened. And then we'll go over the BLS jobs report. There was a big firing of the commissioner. Trump basically said you were fired, looked at the data, looked at all the revisions, and saw how poorly it's been handled for the last year and a half. So Erica is out. And that all happened on Friday. And the Senate also passed an MBA-supported trigger leads bill. We'll go over that and what that means for the consumer. So a lot to go over. Let's jump right in. So first off, the BLS jobs report. You're fired was just said to Commissioner Erica McIntyre, and it was actually well deserved. How it was done was, I don't think, in the best manner, but that's my opinion. But let's jump in to see kind of what is actually happening here. So first of all, the Bureau of Labor and Statistics, the BLS, or what I've liked to say for the last several months, BS. Drop the L because it's been a bunch of BS. And why do I say that? Well, the numbers have been just flat out wrong. And wrong to a point where they actually hurt the markets. But when they're revised to be accurate, it doesn't have any impact making their markets better. So they harm the markets. It's really been bad. It's keeping the Fed chairman from cutting rates. He's looking at the labor markets, the statistics, and he's seeing that there's a strong labor force. So he's keeping rates high. So let's dissect it. This is July. Now, the reason we saw rates get better on Friday is because the BLS jobs numbers finally had some truth, right? The truth shall set you free. 73,000 jobs were created in July. Estimated was 110,000. So that's off by 25, 35,000 jobs, right? So weak jobs numbers is good for mortgage rates. So that was weaker than expected. Mortgage rates got better on the news of this. But let's dissect this a little bit. The jobs that were created were only in healthcare and social assistance. So that doesn't scream a strong, thriving economy when those are the only jobs being created. To me, that's not a strong economy. I mean, it just is. Leisure and hospitality was only 5,000. So not really the best job growth areas for a thriving economy. So overall, somewhat weak. Now, the birth to death model, which we can go on and on about this. If you want to Google it, it's just a very antiquated way of figuring out jobs. They said there was 257,000 new jobs. Well, wrong, way off. If you look back, they corrected this. They did a Q4 adjustment, and it was revised down from the numbers they said by 170,000 jobs. They were wrong by 170,000 in Q4. Now, on top of all of that, we also had some revisions for the BLS numbers. So in May and June, they said, yeah, we were wrong by a lot, by 258,000 jobs in 2 months. So the jobs numbers that came out in May that said there was 144,000 new jobs was actually only 19,000 new jobs. So the feds were looking at that. That's good, strong, adequate job growth. Let's not cut rates. And then in June, they said there was 147,000 new jobs created. So the Fed said, that's pretty strong, pretty good employment numbers. Let's keep rates high. In reality, they were only 19,000 jobs created and 14,000 jobs created. And they were off by over 258,000 jobs. So mortgage rates could have come down. If they showed that only 19,000 jobs were created in May, mortgage rates would have been better. In June, if they showed that 14,000 jobs are created, mortgage rates would have been better. So it's really, really frustrating. To top it off, if you look back earlier this year, they made a 12-month analysis and they revised that data, and they showed that of the 2.5 million jobs that were created, out of that 2.5 million jobs for that time period, only 1.2 million were real. 1.3 million jobs wrong. They were off by over half. So now you know why Erica was fired. The data is just terrible. The problem is it affects the markets when the data comes out, but when it's revised, it has no impact to make them better again. So it's been really traumatic for the mortgage industry. Mortgage rates should be at least a half better than where they are now, if this data was accurate. So that's why we saw the firing. It's frustrating, but the low numbers that came in, that's why we saw rates get better. So here we go. Now, the next thing we want to talk about is the Senate passes an American Banking Association backed bill, which is to curb the abuse of trigger liens. So if any of you have gotten a mortgage in the last several years, you know that when you have your credit pulled, all of a sudden your phone blows up. Some of the customers think that I sold their information or the lender sells their information. That's not accurate. Why would we sell information to other lenders? What happens when a hard credit report is run, a hard inquiry, is Experian, Equifax, and TransUnion sell all of that data to a bunch of other mortgage people across the country. That's called a trigger lien. When the mortgage is pulled, when a mortgage credit report is pulled, mortgage companies can buy those and call those people and say, hey, are you looking to shop for a mortgage? It looks like you just had your credit pulled. And they can undercut and try to discount and try and win the deal. It's really abusive. It's really frustrating because as a consumer, you run your credit and then all of a sudden your phone blows up for 2 to 3 weeks in a row, nonstop with spam callers. It's unbelievable. In the mortgage industry, it's really frustrating because you go through months and months of working with a customer and then someone tries to undercut you by a couple $100 or whatever it may be. Imagine in real estate, if you sign a buyer broker agreement, that becomes public, and then the real estate community or the National Association of Realtors sells that information that somebody's looking to buy a home to 100 different realtors, and then they all call to discount their commissions to try to get the deal. It's outrageous. And finally, something is being done to stop that. So I'm really excited about this. It's really going to help the mortgage industry. It's going to help the consumer to stop from being absolutely hammered with phone calls every time a credit is run. And it's just good news overall. So that's exciting. Probably won't take effect for 3 to 6 months, but at least it's a step in the right direction. So with the lower jobs numbers, what happened to mortgage rates? Well, let's have a little peek. So here's the Fannie Mae 30-year universal mortgage-backed securities. On Friday, we saw a big move forward upwards. We saw like 50 to 60 basis point improvement in pricing. That's about an eighth, maybe a quarter better in rate in one day. That's really, really, really good news. And then today we're trying to go higher. If you look back early April, we're almost at the levels of where we were back in early April. So that's really, really good news. And we hope to continue. But this is the Fannie Mae 30-year. When this rises, mortgage rates go down. And let's look at the 10-year because the 10-year is at a really critical level. Friday, we dropped all the way down to just above 4.2. Today, we tried to go below it, but we stayed above it. So right now we're above that level. We really, really, really want this 10-year to go below that 4.2 like it did last April. And we see this, it went all the way down to like the 3.9 range. If it does drop there, mortgage-backed securities will follow suit, and we should see some improvement in mortgage pricing and mortgage rates. So for now, we saw some pretty good gains on Friday. We're going to watch this carefully to see if we can't gain any more. And who knows what the revision is going to be for the Bureau of Labor Statistics for the month of this last month that was just reported at 70,000 and change when it was supposed to be 110. They may revise that down to negative 25,000, but we'll see. We'll see what happens with the BLS and with those that are managing that transition from the current commissioner, Erica, to whoever it's going to be on the new commissioner. So it's going to be interesting to see what happens there, but at least finally somebody is looking at how these numbers are reported. Finally, somebody is looking at the data saying this is not right. We need to fix this because it has been antiquated. It's done by surveys. 44% of the inflation numbers that come out, 44% of that equation to calculate the inflation is shelter. And you know what a big portion of that is? It's home equivalent rents. So if you were to ask, or somebody was to call you and say, hey, how much do you think you can get for your house if you rented it? That number that is spewed out by that normal human being, that normal person that maybe not be in real estate, that number on what they think they can rent their home out is used to calculate inflation. Now, you can ask anyone, even in real estate, what they think they can rent their house out, and they'll probably be wrong. I mean, if you're not in real estate and you don't know what it's going to be, I mean, that number is just so ridiculous to try to get, and they revise it all the time, and it's not accurate. So hopefully the microscope, a magnifying glass is going to be put on how they collect data, and we can really get back into the 21st century on how we do that, because I think it'll help overall the markets to be a lot more efficient, a lot more accurate, and we can make real decisions at the Fed instead of using data that's incorrect. And we should see rates actually come down now that we have some new data, some good data, and some microscope on that. So that's my 2 cents. Hope you guys are going to have a great week. I'm not here all week if you need me. Have a great day, guys, and we'll talk to you soon.